We are live right now.
Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I will be your host for about the next 20 minutes here on Options Guide TV. So the markets are, well, we're getting in the middle of August. We're starting to go towards September. So the markets decided to sell off, I guess. I don't have a good reason for it. Overall, the AI play has gotten a little scary. Palantir is pulling the market down, literally just yanking it as hard as it can to the downside. And just earnings in general this week are interesting. We have Walmart that's going to be announcing tomorrow. Lowe's and Home Depot, medium, right? Lowe's is up a bit today. It's a little bit lower valuation than Home Depot. Home Depot, our trade looks really good, honestly. For a second there, it was a little bit scary, but then the market retraced a little bit and we're down today. So now we're right in a kind of a sweet zone as far as our trade is concerned. And let's go to that trade. So let's run to the Tradier Pro software, and we're going to look at the option chain, or let's start with the what if calculator in Home Depot. So we have this one in. Let's go back to Home Depot, and we're going to add, what we did was a skip strike butterfly. We were just beyond the expected move, and we were about a 1 standard deviation move out of the money when we put the trade on. So the trade that we had in Home Depot was, we bought the 412 call with the nearest term expiration, which is this Friday, August 22nd. So we bought that call, and I'll set it up the initial purchase, not how we would close the trade, right? Because we would do the exact opposite. So the initial setup, we bought the 112 call. We sold 2 of the 415 calls. We skipped the 417 and we bought the 420. Right now, you can get this, you can close this trade for basically even. We put the trade on when we started this. We got a net credit of 53 cents to the account when we put it on, 2.5 points wide. I think during the show, it was maybe around 40 cents when we did it. My screenshot says 50 cents. But anyways, we're captured that credit. Very solid net credit to the account for doing it. We can get out at 0, but there's really no reason to. And the main reason why is that we have this hedge. Now, normally, if you did a short call spread and you could close it for a nickel or a dime, right? You would flip the script on this trade. You would do the exact opposite. This would be a sell. This would be a buy. This would be a sell. And you'd be paying a nickel to close it. And you would capture the whatever you got the trade off at. We'll call it 40 cents. Okay. And if you captured that, then you would just get out of the trade because you have a short call spread on and you still have that risk. Why not grab 90% of the premium that was received and not have any risk, especially in this marketplace where we see Home Depot a minute ago was down 4. Now it's down 2. Now we're on Wednesday. You still have all day Thursday, all day Friday. We still have time premium in these option contracts. If you look, the 405 right now is trading for $3. If that was the at the money option contract, guess what this one would be trading for? Like if the market went 10 points right now, this option contract would be trading for $3. So it would still cost us to put this trade. It would still hurt us in that we'd still have to pay a lot of juice on this. So we don't want it to be at 415. We want it to be 10 points out of the money. And ideally, the market would stay here today and then start drifting towards the 415 over Thursday and over Friday. That would be the ideal scenario. If it goes down, no worries. We made our 40 cents. Whatever we sold this thing for when we first put it on, that would be our net credit. On the way down, we're fine. We have the potential to make $2.50 on this trade. And I'll send it to the what if calculator. It might be a little bit easier to graphically talk about what the trade looks like. So right now you're saying that we got it done for a small credit, right? But we know that we got it done for right around here, right around this number. So that's where our line would be. Here's where the market is at. I'll zoom in just a little bit here. So here's where the market's at, 404.26, 10 points. On a $400 stock, that's not a huge move in the underlying, but it is a few percent. Right now, we're down about 1% at this point in time, down $2.77. If the market starts drifting this way, if it moved today, we would not be happy that we didn't get out of the trade. Well, according to the profit and loss graph, we would be about break even. So time decay is going to start affecting us actually from Thursday on, every hour that goes by, this green line is going to start drifting towards that precipice of our butterfly. So it's in a good location. I would keep the trade on. You could close it out, capture the 40, 50 cents, whatever net credit you put it on for. But I would, if I'm watching the market, I would keep this trade on. And then as hopefully we maybe even just stay where we're at and then drift higher on Thursday. And then ultimately you could put this on for a 50-cent net credit. And in theory, you could take it off for a $2.50 net credit. So you can put it on for a 50-cent net credit and then take it off for a maximum of $2.50 as your net credit, meaning you made $300 on that trade. Now that would be the max. It means it would have to go out right here, right at expiration. If I put it on and I could close it for $1, well, I'm going to do that. That's the way I would look at it. I'd look to try to make maybe $1 or so more on this trade if the market would start drifting up and it took a day to do that. And I would be looking at the market getting to 414, 415, right in this range, and then look to try to take the trade off. So the only thing, if we go back and look at the chart, there was a minute, right? And I'm going to zoom in on that chart because I was watching it. It was right on the open, right at about 10 o'clock when this happened. The market opened right at our strike, which was one standard deviation away. So it opened right at 415, but it only hung there for like a minute. And I did grab a screenshot. We were down, well, it was 80 cents to close the trade. So if you got it on for 50 cents, you were down 30 cents. So if you panicked and closed at that moment, which is very viable, we say if it does hit that short strike that you got to think about getting out. But it literally was there for a minute. And then by 10:30, we were already down in the 411 range. And then we started drifting lower before the end of the day. Now we are lower once again, but Lowe's is doing well. Let's see where Lowe's is at. It's hanging in there. It's up 1.26%. So solid earnings report today. Home Depot, it was more about their forecasting. They did miss on I think they met. I don't remember which one they missed on. They missed on one of the two big factors, but their forecasting in their meeting afterwards was solid. And so far, 2 thumbs up for the retail. The consumer's still hanging in there, if you will, and is really what's keeping this economy together. Your ability to spend, yours and mine, ability to actually spend, and the fact that we're doing that is really keeping the markets a little bit stable. Little bit skeptical today. Our long VIX trade is finally going to probably start kicking in a little bit. Let's look at the VIX options. Let's look at the September expiration. Here it is. This is remember, we want the green one. We don't want the weeklies. We want the green. And let's see where that market is at. Curious. 19. Yeah, it's between 1850 and 19. So this is where the call is. On the call side, 1850. On the put side, that's $2 on the ask. And then if you go over to the put side, it's $2 on the ask on the 19th. So we're at 1875 for that September option contract. Yeah, I wouldn't mind. That's not a bad price for that September. And we go out to September 17th, and that's the middle of September. If we look at October, bet you that's closer to 19. Let's see where that's at. Yeah, we're 21 there. Okay, so in October, this ask price is $3, and the 21 is $315, $290 and $315. So we're about 21 and a half. Or no, we're about 20 and a half. $20.50 is about where that future is at. I think I would wait on that one. I don't mind buying this September one. And you could go about, you could either buy and add the money, or you could sell something against it. If you go all the way up to 24, you're getting $1 for it. Buy the 20, sell the 24. That's 50 cents. 50 cents to make 350. Talking myself into this trade. Yeah, that's not a bad scenario there. The VIX index can hang out around 25. We've seen that before. I don't know if the charts, it's a derived value now. So if we're looking at, here's 25. I guess we reached that level not that long ago. And how many times have we hung out in that range? But this chart is, now the VIX is a derived value. It's based off of the future. So it's an estimate of where the VIX is at this point in time. It's a discussion for later. But ultimately, yeah, I don't mind that trade at all. With the September future trading at 1875, buying the 20, selling the 24. And you could even go down lower if you wanted. That's not bad either. Should have put that in the what if calculator. So we could look at, if we buy the at the money, buy this and then sell the 22, we're still getting a quarter more on that one. How much is that? 59, yeah. But it's only making 3 instead of 4. That's why. All right, let's send that to the what if. So I think we're going to look at this on Friday. Let the market settle down a little bit today. And I like where that is at. If the VIX has spiked today, and with that, we're still seeing that future trading at that level. So the VIX is at $17.13 right now, and it's up $1.56, which isn't bad considering what the market is doing. SPX is down 1.33%. But a lot of the leaders, NVIDIA is down, the Palantir is down, a lot of the AI, the stuff that has kept the market up. NVIDIA is down 260. The Qs are down 1.43, or the NASDAQ. We got the Russell 2000 down 76. Interesting. Yeah, I think we wait a day or two, and then we look at doing either this trade or sliding up and looking at the alternative trade in the VIX going into September. All right. Now, we got our SPX trade now. So SPX trade worked. And UNH. I forgot about that. UNH worked out great. It's one of those trades you do in UNH, and you say to yourself afterwards, you're like, I should have bet the farm on that one. And that's kind of the way you look at it. But then you're saying, yeah, that never ever, it feels great in the moment when I was looking at it. The fact that UNH made the big run up, that the implied volatilities skyrocketed on an up move. All it needs is the market to just stop for a second and the balls were going to come off. And they did. And the stock, it landed right where we wanted it to. So it was a great trade on Friday. I have no problem saying that. I did it in my own account. I liked that trade a lot when we went into it, and I kind of emphasized that. But vols right now are now at around 46%. They were up as high as 90% on the implied volatility. Like this, if it stays at 46 on this front month, gosh, we might do it again on Friday. You know, UNH, well, the story behind it is Warren Buffett, not Warren Buffett anymore because he's retired, but Berkshire Hathaway came out and bought $1.6 billion worth over the last quarter, and they had to report that. And so once that news hit, UNH jumped, oh gosh, 19%. I think it did 10% and then another 5%. And then we ended up with a 1-day trade in UNH where we did a butterfly, just hoping that the market stayed where it was at. Let's go look at the chart of it. We could do this. I guess we could do it Friday as a day play, but here's what the market did. So the market came up, got up to this level. This is the 15th. This is the 18th. And it closed somewhere right around here. Right around 304 is where it closed at. And I think we did to 305. So now market's up to 315, came back down. We're now right back in that range. As long as we don't break below this gap where it's trying to fill the gap to the downside. But even if it does, we're going to lean bearish on it. We're going to do, in this instance, with the market coming down where the market's at, 3 down days, we would do a at the money open wing butterfly right around the 300 level. You got high price stock. You still got high volatility. Yeah, that's going to be an interesting trade. We'll put that one together on Friday. Our SPX trades, our little experiment heading into Labor Day. That trade worked out too. We did that last week, and I think we're going to do that again. So we got this highly scientific process that if the market is down, we do an at the money open wing butterfly with puts to the downside. It's very scientific in how we select it. But so far, I think the last 4 trades in a row, the market behaved and did very well on the trade. So our spread that we put on just a few days ago was 64.55. So where's the SPX at now? 63.67. Down 81 today, down 1.6%. All right. So I say we stick with that theme because that trade worked out good too. The market stayed fairly close to the middle price. Like I said, I'm going to put this all together and put it in a PowerPoint for that Monday Labor Day show. So let's do this one again. I think I have this one in the what if calculator. And zoom in on it. Send it to ticket. There it is. Okay. 180. Wow. Look at the difference in just the VIX. Just a few points in the VIX. 63. Where are we at now? 63.51. The market. Market moved up. Okay, that would make sense. So it's trading a little bit less. So we have to adjust it. Let's go back. Here will be the official paper trade. 63. We always want to we'd like it to be at the money when we're doing it. So we're jumping in leaps and bombs right now. 63, 69, 48, down 80 cents. So we're going to do the 70, 63.70. So we're going to start here. We're going to go, and that is a buy. We're going to buy that one. We're going to sell 2 of these, and we're going to go 5 points there. Yeah, still quite a bit of difference. 230. That's why we need the 0 DTE. Okay, that makes more sense. It's still going to be less. We usually pay around 330 for them. I'm expecting this to be around 3 today. Yeah, 305. Jumping around 270. Wow. I'm definitely going to we're going to say 295. Yep, 295. We're 330, 322, 236. Okay, official paper trade. Boom, right there. Take the screenshot. Send that to the what if. And that will be our trade for today. So, open wing butterfly is what we're looking to do. This will be part of our Labor Day trade. We're going to do another one on Friday. We're going to keep doing these every day. We're putting them on at, I should do it first. I should do it right at 11 o'clock because a half hour matters. And zero DTE options, a half hour of time value is worth a lot. So right now you can get it done for $3 at the money. I'm going to say $2.95 is our trade. Our average price has been around $3.30. So the fact that the VIX is up 2 points today, trading around 17, means that in general volatilities are up. It's probably more so even on the shorter term options. So because of that spike in volatility, we can get this done for a little bit less. The possibility of, we're not looking to make more because we can get it done for less, right? Time decay is still time decay, but your initial risk is lower, especially if you're going to let that ride. So I'd obviously prefer to pay $3, but I'm still looking to get out if I'm at $4 or $5. I'm not looking to try to make a home run. A home run would mean that you could sell this for $10 or $1,000 to get out of the trade, meaning you made $7 on the trade, or $7.05 if you want to get technical. And that's not the goal. We're going to be out by between 2 and 3 o'clock. We're not going to stay in longer. Gamma and Delta take over at that point in time. We want Theta to be our friend. Right now, I feel like Theta is more the driver of the trade than Delta or Gamma. So that's the way we're going to put the trade on. And I'll come back in and take a screenshot again today at right around 3 o'clock and see where we're at. And I'll keep an eye on this trade. And that'll be our official paper trade for the day. And then next we have Walmart that is going to, well, we got TJ Maxx actually had a good day too the other day. And then with Walmart, where are we seeing Walmart at? 1 second here. We could look at doing something in Walmart if we wanted to. Walmart's before the open tomorrow. 23. We're up 85 cents before the open tomorrow. You guys want to do one in Walmart? I'm not that excited about it. $102 stock, trading at 78% vol. They announced you got all day Thursday, all day Friday for that to work out. Did the zero DT trade, made some money. All right, Kurt. And good morning to you. Thank you for sharing that. If you did some of the trades, you know they're not meant to be recommendations. Share it with us. And I'm going to emphasize that if you're kind of leaning into it, we see the format. I do like doing them a half hour earlier. And like I said, today I should have started at 11. I should start with that trade. I'm kind of mad at myself for not remembering that I should start with the SPX trade. And we're going to do this all the way up until the 1st of September. All right, so let's just look at Walmart. You know, it's a high valuation. They're taking over in grocery. That's a big thing. Walmart is becoming a leader in grocery. Everybody's Kroger's, Albertsons, all of them are worried about how Walmart is doing. But then you have Amazon that's trying to cut into that world too. So Amazon's starting to address grocery, which is going to be fairly tough competition. Their margins are a little bit lower because they are grocery. Actually, Target has better margins than Walmart does. And I think Target just announced, right? TJT. Let's see what happened with that. Is that up today? No, Target is down. Unusual option volume. I love this little feature. I don't know exactly when it popped up on the platform, but they're showing unusual volume. So look at the open interest on this position on the 95, 12,000 contracts at that level. And then there's unusual option interest here. It must have been a trade today. On OI, where's the volume? I need to add the volume. So there should be a ton of volume that must have happened on that 100 today. But that's what the U stands for. I don't have volume. I just have open interest. But this has obviously drawn a lot of attention. A lot of people bought some puts there. And if they did well, right? No, not quite well. If they're down, the market was down 8, they would hope that the market would get to 95 at least. It depends on what they bought them at, but they would have been way out of the money. Yeah, very, very interesting. Okay, I digress. With Target. So Walmart is up, Target is down. Well, let's look at a skip strike. See, I don't know if there's enough juice in it. Maybe 1 point wide. 36. Yeah, we can't go 2 points wide. We have to be really tight. Buy, sell 2. Yeah, net credit of 5 cents. I don't think that's worth doing. I mean, even if you were just doing the call credit spread, it would only be 7 cents, right? Because the skip strike is the 110. So the call credit spread would look like this. If you did that, 110, 111, 7 cents. Yeah. So it's just not quite enough juice to do this near term. If you were going to do it and lean bullish, interesting that Walmart is up today with Target way down. I would look at doing fairly wide open wing. 3 and then 2 and buy this one. So you can make 44 cents if it goes above 108. That's within the 1 standard deviation move. The delta is 17, saying there's about a 17.5% chance of the market finishing above 108 after their earnings report tomorrow. Send that to the what if calculator. And so that's worth $1 there. Yeah, I mean, I think this is where I would lean. The valuations are high on Walmart, but man, they've been really just solid management. They've been managing and making smart moves. Their presence online has gone up threefold. They're really trying to battle with Amazon in that world too. This is where I would look to do. You're only risking 66 cents. If you bought the call outright, you're paying $2. You'd have to go all the way up to the 108 to pay 66 cents. Market blows it away above 108. You're still going to make 32 cents. Well, it's 34 if we use that number, 66 right there. That would be my trade. That's what I would look at. I would lean bullish on Walmart, especially it being up today with Target down. And you got 2 full days, all day Thursday, all day Friday. This premium needs to come in. We're trading at 73 vol. You would expect it to be close to 30 tomorrow. These vols are at the same volatility as the historical. All right. What do you guys think? Do you like the Walmart trade? Do we get a thumbs up or? All right. Well, that'll be it. Right at 11:30. That means that our time is done here. Thanks for tuning in for Options Guy TV and winging it with me on the Walmart trade. Loving what we're doing in the SPX. This today, well, I don't want to jinx it. I don't want to jinx it. I'm going to knock on some wood. And then the UNH trade, I think we're going to put another one on. As long as vols stay that high on that underlying stock after this downturn and this big move, yeah, I think we can do another one of those on Friday. And that'll be it for this edition of Options Guy TV. Thanks for tuning in. We'll see you this Friday at 11 a.m. Eastern Time. Make sure you set your reminder in your iPhone or in your Android. I don't want to be... Options Guy TV is for all, so feel free. 11 a.m. Eastern Time this Friday. Thank you for tuning in. We'll see you then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.